Welcome back to the Funding Blueprint, the show where we sit down with the boldest voices in startups and venture to unpack the real stories behind scale, strategy, and staying power. Today we're joined by someone who brings both hard-won experience and visionary leadership to the table, Miriam Altman-Reyes, founder, CEO, and general partner of Brass Ring Ventures, an exited operator-led fund and studio investing in tech founders building solutions that foster economic mobility. Miriam's path is the kind of journey we love spotlighting, deeply mission-driven, operator-tested, and full of insights founders need right now. Before founding Brass Ring, Miriam co-founded and led Kinvolved, a pioneering edtech company combating student absenteeism from idea through exit to Power School, then a publicly traded company backed by Vista Equity. She then continued to lead innovation and go-to-market strategy across 5 new products within Power School's innovation division. But her influence doesn't stop there. Miriam's an active coach with Transcend Network, a board member in her community, and a recognized force in education, workforce development, and strategic M&A, with nods from Forbes 30 Under 30, NYT, Cranes, and more. In our conversation, we'll dig into what it takes to communicate effectively as a founder and leader, how to approach fundraising with strategy and self-awareness, what really drives successful strategic partnerships and M&A outcomes, and how to build teams that last. Miriam will also share her perspective on navigating government sales cycles, scaling impact, and staying mission-aligned, even as the stakes grow higher. So let's get into it. Miriam, welcome to the show.
Thank you for having me, Ceci.
Of course, we're so excited to have you. Let's just jump right into it. Executive communication, both internal and external, is such a key part of leadership, especially during moments of growth or change. So my question is, from your time leading Kinvolved through to exit and now working across your portfolio at Brass Ring Ventures, what have you learned about what great communication looks like from a founder, both inside the company and out?
Yeah, I think communication is so critical on so many levels and really important for a CEO in particular to be able to have and develop those skills. It's really important to motivate your internal team and get them excited and keep them energized. It's not always easy to be working in and building a startup, and so really inspiring your team is critical. Also, sharing information transparently is something I really believe is critical as well with your internal team too. You also want to make sure that you're sharing updates with and continuing to inspire and kind of galvanize your advisors, your investors, your board members who are kind of in the trenches alongside you and alongside your team as well. And then thirdly, maybe even most importantly, is the external communications to prospective investors and more importantly to customers and prospective customers as well. And so I think really an effective CEO is able to figure out how to distill information, think critically, and translate that information and kind of what it means for your constituents into honest, transparent, but again, inspiring and exciting data for folks to take in. So some things that I, always suggest to founders when they're considering how to communicate is really, firstly, over communicating, really specifically the why behind decisions, not just what the decision is. As a leader, not that you have to justify your decision making so much, but being able to help bring people along on your journey to making a decision. Did you consult other people? Did you look at data, et cetera, to come at the final sort of decision that you've made? It's very common that, and not everyone that you're speaking with is going to necessarily agree with the decision, but it's much easier to get them on board if they feel like you went through a thoughtful process to arrive at what you did. So providing that kind of over communication, providing consistent written and verbal updates to all of those parties, internal, external, and beyond. Really listening also, not just talking, but listening to each of those kind of constituency groups and understanding what are their challenges, what are they excited about, where do they see the opportunity, what have they learned, and how can that impact you as well in your leadership and your decisions. And making sure that your communications, your updates aren't just about, data and hard metrics, even though those are important pieces of information to share, but also about really the stories of the impact that you're making on your customers and your end users and beneficiaries. So those are some of the tips that I often like to share.
Yeah, absolutely. Thank you. Kind of shifting a little bit here to more of a fundraising conversation. Fundraising can feel like a full time job, especially for mission driven founders who are also heads down building. You've been on both sides of the table. So, what advice do you give to founders on preparing for a raise, particularly in sectors like ed tech or workforce where metrics might not always fit a standard VC mold?
Yeah, it's a great question. So firstly, and I'll probably come back to this several times in our conversation today, I really do believe as a founder and an investor that it is truly possible to build companies that are successful financially, as well as that can have a positive impact on the world. I've done it personally. I've seen others do it with success, and so I know that these companies exist and that this kind of double bottom line opportunity is possible, and investors don't need to think about impact investing, quote unquote, as always taking a concessionary return. So that's just some kind of grounding that I like to share first and foremost. In terms of advice to founders when they're preparing for a fundraise, kind of two things come to mind. So first, really translate your impact into language that investors understand. So the question that you may ask yourself is, how does your company's impact really drive your business growth through your customer retention, contract expansion, and or new logo acquisition? For example, in my last company, Kinvolved, our sort of outcomes we are trying to drive towards were improved student attendance rates. Improved student attendance had a positive impact on our customers' bottom line. They're able to recoup additional budget based on student attendance. And when we were able to show results for our existing customers, not only were we able to, convince them to stay with us and be continuing to use the product and they saw the impact, but often what we saw was we were able to expand our existing contracts and convincing them to add additional features of the product that could drive deeper impact, and expand, if they were starting with a smaller subset of students, expand into the entire district. We had really strong retention numbers, upwards of 90% year over year, really since founding, even through our growth, and really strong expansion numbers as well. And then similarly, on the flip side, you want to also be sharing those kinds of stories with your prospective customers too, because again, if they're seeing that you're having a positive impact among peers that they kind of see themselves like, they're going to be more likely to want to invest. So what I'm talking about here is more communication to customers, but it comes back to that investor narrative, because if you're able to really, again, communicate your impact to your customers and your prospects, then it translates to business growth. That's going to also translate back into really kind of convincing investors that this isn't just like a nice, impactful business for society. Yes, it's that, but it's also something that's going to drive a strong financial return because the impact is intrinsically linked to the actual sort of like financial bottom line of the business, right? So sort of that's one thing. Secondly, I kind of touched on this in my earlier response. It's really important for, again, the CEO to be able to be a successful communicator, and beyond just a successful communicator, what I mean is really a successful storyteller. So you want to be able to, again, kind of distill what's happening on the ground with your customers, what's going on when you see, positive or maybe negative, data points in terms of like retention, expansion, new business, top line revenue, your cash flow, all of those different metrics that are things that investors are going to want to see. You want to be able to be transparent about what's not working, but also translate that information into something that's inspirational. And so that means being able to put numbers into context for investors and explaining like, here's what 95% retention numbers means. This is why we spent X number of dollars investing in R&D, because we have done the research and we understand by talking to our customers it's going to drive additional commercialization and revenue opportunities, and here's what we project and why. But again, kind of really telling that narrative, putting the numbers into context, and then again coupling that with real stories of impact and what the numbers actually mean to customers on the ground, that's going to drive additional adoption, which is what investors ultimately want to see.
Absolutely. You successfully led Kinvolved through an acquisition and now support companies thinking about their own strategic partnerships or exit paths. So, for founders in that position, what signals should they look for to know a partnership or acquisition conversation is worth pursuing? What should they be doing now, well before any deal, to make sure that they're set up for the best outcome?
Yeah, that's also a really great question. So first and foremost, these kinds of partnerships most often take time to build, right? And the best, in most scenarios, the best, kind of acquisition outcome is one in which there's a pre-existing relationship already in place, where you've had an opportunity to mutually get to know one another, get to understand sort of your motivations, your culture, how one organization would fit with the other or within the other, and even, more importantly, for both sides,
Yeah.
especially when there's usually one entity that's much larger than the other. What the mutual offering or mutual benefit will be. I oftentimes see startups that are like, yeah, we want to get a, partnership with Power School or, Instructure or, Google or whomever it is. And they only kind of come to that conversation with thinking about how it's going to benefit them and their company without thinking about how do you communicate, again, back to communication as the core skill,
Yeah.
right, or a core skill. How do you communicate that information to the much larger, oftentimes, entity that, might want to consider partnering with you? What is the benefit that you uniquely bring to them? And, for better or worse, oftentimes it's, ultimately translates into dollars and cents again. And sometimes that could be bringing in customers that they don't have access to in some way, or bringing in, a product offering that they can cross sell to expand revenue with their current customers, et cetera. But really thinking through that narrative is important, and then having an opportunity to test that through some kind of a partnership before you kind of go all in. Is also really important. But like I said, even to just with the bigger the company, basically, typically the longer the period of evaluation takes to even get an initial partnership off the ground. They, often have many different opportunities that they're exploring at the same time. And sometimes the teams are limited more than you might expect in a large company. And so, with founders, it's important to be patient, but also make sure that you're not putting all your eggs in a partnership basket while you're, figuring out if the partnership is viable. So that's kind of baseline. In terms of the second part of your question, what should you be preparing for before the opportunity for partnership or acquisition, requires, particularly an acquisition. So, kind of three things. One, get your house in order. And I would say this also for raising, an investment round too, right? Especially as you get into more institutional rounds like Series A and beyond. Make sure that you have, your business in order. You clean things up. Your financials are clean. Your cap table is really clean, and you've been able to document important information like your key contracts, purchase orders. You have all of your legal documents sort of in order, with employment and HR, et cetera, like things that may seem kind of basic, but often are like, can easily be kind of left along the way as startups are just trying to move fast and close customers. You want to make sure that somebody on the team, usually like a COO type of a role or a CFO, whether that's contracted or full time, is taking the time to, really kind of do that diligence internally to clean everything up. That's really important. Secondly, like I said earlier, cultivating relationships early is really critical. Figure out ways to partner with organizations that you might see as a potential, exit down the road. I would say most founders in the sector, unless they've been through an exit already, are not necessarily like building a business with the idea of actually exiting it. Like they're building a business because they see an opportunity to solve a problem and to build something that can have a positive impact and also, be successful. But it is important to, soon in your process of building, start thinking about who could be the right kind of acquisition partner. What are the different pathways to acquisition? And, how do you spend a reasonable but, limited amount of your time trying to explore and build those relationships early on so that you kind of get to know each other. And then, third, really important, especially as you get to a place where you're actually, have an opportunity to explore an acquisition, whether that's something where somebody comes to you and is interested in acquiring you, which is what happened with me with my last company, the Power School, or whether you're, actually running a process and you've decided like it's time to sell the company or merge the business, and we're actively looking externally for bids basically and LOIs. You want to think about what are the ways you're going to evaluate the opportunity. So for me, it was kind of, fourfold. It was firstly, like, what's the opportunity for expanded impact? Are we going to be able to get to more students and families and educators, by partnering with someone like Power School? The answer there was clearly yes. Power School has, at least one product sold in about 80% of US school districts, and a much larger sales team than we had. And so we had confidence that that would be possible. And we'd also done enough to validate that, their intention was to continue to invest in and expand the business and cross sell the product, not to, shut it down or really like hinder its growth in some way, which is the case in some, acquisitions, that I'm sure we've all heard about. Secondly was what happens to my team? Is my team going to be invited to come along? If so, sort of how are they going to be compensated? A lot of people who work in startups don't get compensated market rate. And so making sure that they're kind of made whole and hopefully then some was really important. Are they going to be incentivized to stay for a period of time to help us through the integration, and like really leverage their institutional knowledge, et cetera? So that was second. Third was what's the impact for investors? We had, lots of investors in the sector we call patient capital. And so, they stick around for in some cases, 10 years as businesses really, take some time to expand and grow. And oftentimes they'll invest multiple times. And so you want to make sure that they're, again, not only made whole, but, see, a good return, right, in an ideal situation. And then finally, founders. What was going to be the outcome for me, for my co-founder? Was it going to be positive? And so in our case, we were able to really successfully achieve check marks on each of those kind of criteria. And so it made sense, even though we weren't actually looking for an acquisition, to pursue one, and to move forward with Power School. But I've worked with founders who feel like they're missing, some of the valuation criteria, and they decide not to pursue a particular acquisition opportunity and explore a different one, or they decide not to, decide to continue to kind of grow on their own. So it's just good to have kind of a framework to measure the opportunity before you start getting into the conversations, and to build that yourself, but also gut check it with leadership team members, board members, advisors, et cetera.
Absolutely. Kind of shifting a little bit again here to team building. It's one of those make or break aspects of growing a startup, and especially tough in those early days. So when it comes to talent acquisition and retention, what lessons have stayed with you across your journey from founder to investor?
Yeah, the team and the people are really so incredibly important. And I know like we're in an era where everyone's thinking about AI and like is AI going to replace people? And like what's going to be the first billion-dollar company that is like a one-person company because they're able to just like build all these AI agents? Yes, AI is changing the workforce and changing, the composition, of teams, including in startups. But I would argue that, people are still really at the core, and it's more about how do the people learn to leverage these kinds of tools to really expand their, value to a business, which is a whole different conversation, but something I thought was just worth mentioning, as this is like very timely in the conversations that we're all having, particularly, among the future of learning and work community. So with that said, I think, early, as people say, not to be trite, but early, hires really do set the culture. You want to start by establishing your values and norms as, a co-founder, co-founding team, or earliest hires, go through that exercise of thinking about like what brings us here, what's our why are we coming here every day, what do we expect from ourselves, and what do we expect from others, kind of what are, again, our non-negotiables when it comes to our values, right? And establishing those and putting a stake in the ground early on can feel sometimes like an extra thing that you don't have time to do because you've got a million other things you're trying to do as an early stage company. But I do think it's important to be clear and to be able to communicate that to people who are considering applying to new roles in your company as they continue to grow, and who come in. Um, I think that, being authentic is really important, right? Especially in a mission-driven business, sector like education and future of work, both for internal kind of operations. I think that's critical, but even more so for customers. Customers don't like when they're just feeling like they're being sold a widget. They want to really feel like they can get to know the people who are, selling a solution. They're selling a solution to a problem, right? Not just a product. So the ways to try to avoid some mistakes that I would say are, if you're hiring, be honest about the stage that you're in, right? And be clear. If you're an early stage company, be clear about that, right? And there's ways to incorporate that into job descriptions without also like turning people away who might feel a little bit more risk averse, right? Realize though that not everyone really thrives in chaos. People in early stage businesses need to know how and be comfortable with wearing multiple hats, and taking on some level of risk. That's just the reality. The earlier stage the business, the earlier ups or the larger upside there is potentially, but also, the greater the risk that there is that cash might run out, or the equity that they're, taking as a to offset their lower than market rate salary, like, never pans out. That is just a risk you have to take. And so I think it's important in the process of hiring to try to assess someone's risk tolerance and risk level and make sure that it actually is a good fit. Sometimes people get excited about the prospect of working in a startup and having lots of influence, but then they realize it's actually not something that they're in a position to take on, given their personal situations, et cetera. And so just trying to suss that out early, I think, is important. Something else that I often see is that people are always trying to hire like good salespeople in the sector, and there's unfortunately not as many of them as we would all like. And founders often, I think, and I've been subject to this too, get attracted to people who have on their resume like a big company that's really notable, like a Power School or like an Instructure or Oracle or something like that, right? That's like, oh, they know how to sell software in the sector. It's clear. But the reality is that what you really want is someone who has tried out what it's like to go from a large entity like that to working at a much smaller, earlier stage business before they come to you. Usually that first transition from large company where you have a lot of resources and lots of bureaucracy, and also in some ways can kind of hide away, and be less accountable, like that all gets stripped away when they come and work for an earlier stage company, and that can be a very difficult transition for folks to make. And I just think founders don't want to be the first one to kind of help people cut their teeth in an early stage business. You want to see some period where they've had success in an earlier stage business before joining you. That's kind of the second thing. Um, and then I think third, it's really important to set goals for each team member, make sure they're realistic, make sure that they align with the departmental goals, make sure that those goals align to the company goals. So you kind of have this pyramid of company, department. Even if a department is like one or two people, you should still have kind of those departmental KPIs that they're trying to hit, right? And then from there, you go into the individual's goals, and you want to make sure, again, that they're kind of clearly communicated up front and that they're mutually established through leadership as well as the actual team member who's going to be held accountable to those goals, so they feel like they're attainable and achievable, so that when you can go back, as you should, every quarter and maybe even more frequently, and you can kind of look back to see, are you on track, are you off track, why are we not, and people are less likely to say, well, I wasn't involved in kind of setting these goals, I didn't think they're realistic up front. You can have more of an honest conversation. And then finally, I think it's really important to just like think about people as humans, right? Like, we all have life outside of work. We want people to have life outside of the work. Working in a startup, working in a mission-driven startup is particularly challenging because it just takes time to build these businesses. And you want people, assuming they're the right fit and able to help grow with the company, right? You want them to be able to stick around, and really to kind of build that sense of team. And so if you just show up on Zoom every day and jump right into a meeting and like never get to know someone's personal situation, you're probably missing out on really getting to know somebody, but also they're going to feel much less connected to you and your organization, especially through the tougher times. So those are some of my suggestions.
Yeah, amazing. Kind of taking a step back a little bit here and just looking at the bigger picture. Some government and education markets are notoriously tough to break into, but you've done it and now you help others do the same. So, what are some key go to market challenges that founders face when selling into these sectors, and how can they structure their early sales efforts to build trust and win deals in a slow moving but high impact space?
Yeah, absolutely. It's a great point. Just to double down in part of what you said in your question, these are trust-driven sectors, and as I alluded to in one of my earlier responses, it's not about selling just a product or a widget or a thing on paper, right, and closing a contract and moving on. People really want to make sure that you understand the pain point that you're trying to solve and how your solution, and you can articulate, again, going back to communication, not only important for CEOs who often need to be the primary salesperson, but also salespeople, customer success, et cetera. People need to be able to communicate how does your solution really solve a problem rather than, just features that can, tick off tactical exercises that the customer might need to go through in their day to day, right? Like you're selling your brand, you're selling your reputation, and it's so important early on to make sure you're taking that really seriously because, a customer that has a bad experience can, turn into something much more negative the earlier you are. So some strategies that I suggest are, firstly, there's something called the customer infinity loop that we often refer to as we're coaching founders in go-to-market and sales and also customer success and retention. And that's the idea that there's this kind of loop. You can Google it and find it or find it on ChatGPT. But basically on the left side of the loop, you've got your sales stages, which are like awareness, consideration, evaluation, and decision. And so you want to move your prospects through that side of the loop. Once they say, yes, I'm ready to decide to move forward, then it's about working on the right side. And the right side is post-contract. So that's customer success, onboarding, adoption, value creation, developing loyalty, and then advocacy. And then again, you want them to go back through that process so they're continually coming back to you. And really developing the relationship at each of those stages is really important, not only to retain your existing customers and expand those, but also really maximize the opportunity to gain new customers. So, you want to, if you are starting with a new, if you're starting with a new sort of institutional customer that has bureaucratic limitations, and especially in the current political environment for a lot of our companies, it makes a lot of sense to start small, really over deliver, and then document your success. So as you're hearing people in your monthly check-in calls with your new customers saying, this really helped drive success in our district, or this really helped in with our employees in this way, like document those testimonials, use your AI note takers, right? Make sure people obviously sign off on your use of them. But you want to start collecting testimonials as soon as possible, even through email, right? Develop those success stories and invite your users to flesh out the testimonials beyond that. Gather data as well. I mean, we need both the kind of numeric, quantitative data as well as qualitative information, and essentially like create case studies and share these both with the customer internally so that they can see this is actually the impact that your various stakeholders have said that we are having, and this is what the data shows. So again, you should renew, you should expand, but also you share those case studies with prospects who know the district or the workplace. Maybe it's geographically proximate, maybe it's a name that they recognize, maybe they connect in some way, and they'll say, oh, you delivered these results for this segment, this aligned kind of customer, you may be able to do similar results for us. So that's really important and effective. Kind of along these lines, get in the door however you can, and ideally get paid. We try to avoid free pilots. And if you have to do a free pilot, think about what's the minimum amount of time that you can offer someone your product for free to see value to then quickly convert them, right? But you want to get paid something, show skin in the game, show that they're willing to pay, and then, try to, as quickly as possible, plan for expansion. And that could look like, starting with a smaller subset of employees or students, et cetera. But as you're kind of mapping out what that pilot or that smaller implementation looks like, map out what does it look like to achieve success here with your customer, and what will trigger that kind of conversion to a broader implementation, and on what timeline, so that you have kind of these mutual goals set up early on, and you can plan for that expansion and make sure they're also planning for the expansion in their own budgets. And then finally, just find champions. Oftentimes those will be, customers that are providing those testimonials, that are sharing those success stories, that are willing to participate in case studies, leverage them, get them to share their stories with other prospective customers through being on a customer advisory board, speaking with you at conferences, speaking on your behalf at different events as well that they might be going to with their own peers. There's no better salesperson for you than a customer. Even customers are even better than the founders and CEO. So those are some suggestions.
Yeah, that's great. Lastly, you've carved out such a clear mission around economic mobility and systems level change, and you've stayed aligned with it across multiple roles. So for founders listening who want to stay true to their purpose, but also feel pressure to chase trends or investor expectations, what's your advice for staying grounded and focused on what really matters?
Yeah, I think, consistently as you're building a business, think about why am I excited to wake up and do this every day? Because it's very challenging and you need to have grit and like long-term commitment to
Definitely.
grow a business in any sector, but in particular, I would say in like more mission-driven, again, government kind of sales, large entities, long sales cycle, you've got to really be committed for the long term. And I think being able to come back to, your North Star and being very clear about that every day is absolutely critical to stay in the game as a founder. And then again, to make sure that the other constituents that you need to be along in the journey with you, your team members, your board members, your investors, your advisors, your customers, you want them to feel the same commitment to the North Star. If a founder doesn't have the North Star and the commitment, what is going to make everyone else stay committed and inspired as well? So some tactics that I recommend would be to firstly make time to really actively revisit your strategy. Do this independently, put time on your calendar, make sure that you don't, ideally, I know this is very hard, but ideally that you don't, let other things kind of creep into this time, but make like a recurring time that you are setting aside for yourself to really revisit your strategy, see what's making sense, what needs to be adjusted and adapted as you're learning every single day. Also go over that strategy and get the feedback from your leadership team, from your board, and then expand it, kind of concentric circles from there to the broader, directors and the broader team. In terms of a sort of tactically how to do this, I would suggest, thinking about the bigger picture on a quarterly basis, right? And setting quarterly goals that line up to your annual goals back into monthly, more strategic conversations, right? Maybe with your leadership team, and then on a weekly basis, have check-ins with your, self, with your colleagues, with your direct reports, that really going over like the tactical details of the day-to-day, what we need to make sure we're getting done to make sure that those like bigger objectives, everything is kind of cascading down from there. And then secondly, engage board members or advisors who can really help keep you as a leader accountable to that long-term vision. It is very easy and very common for early stage CEOs to be wearing all the hats, to be doing all the things, to be selling, to be trying to retain your customers, to be hiring, to be trying to fundraise, and you're doing a lot of tactical things. It can be hard to do that and also stay focused on the long-term vision and make sure that all of the day-to-day activities that you're doing are actually driving towards a broader set of goals. And so it's often very helpful to have, one or more kind of accountability people who are slightly removed from the day-to-day who can help keep you, focused on what are the bigger picture activities. Why am I spending my time doing this? Should we be fundraising right now, et cetera, right? Really like asking those key questions. And ideally those people would have been, current or former operators who really have like been in the founder's shoes and know how to balance the tactical activities in day to day with that bigger strategy and structure. And that's part of what we at Brass Ring kind of bring, based on the fact that we had that kind of board membership and leadership as well in our previous companies. And then finally, again, just kind of have that North Star, really keep the mission close, make sure that you're getting into your, going on site to meet with your customers, that you're staying connected with them, that you're really capturing those stories and staying motivated and not only, keeping those to yourself, but sharing those out with your team, with your board, with your investors, and again, with your customers.
Definitely. Thank you so much for sharing all of that. But unfortunately, that wraps up today's episode of the Funding Blueprint. A huge thank you to you, Miriam, for joining us and sharing such honest, strategic, and empowering insights. From navigating executive communication with clarity, to building investor alignment in impact-driven sectors, to her experience leading Kinvolved through acquisition, Miriam brought the kind of depth that founders at every stage can truly learn from. We also dove into what it takes to build strong strategic partnerships, hire and retain top talent with intention, and crack go-to-market in education and government sectors, which is no small feat. And through it all, Miriam reminded us of the power of staying mission-aligned while scaling sustainably. If you want to check out or learn more about Miriam's work, be sure to check out Brass Ring Ventures, a studio and fund supporting tech founders building real solutions for economic mobility. If this episode sparked something for you, don't forget to subscribe, leave us a review, and share the funding blueprint with builders in your network. We're here to help founders design smarter paths to growth, and every listen helps us do just that. So thank you so much for tuning in. Thank you so much again, Miriam, and we'll see you next time.
Thank you.